everybody, and welcome to the Vancouver Resource Investment Conference channel. My name is Jesse Day. We're counting down to the next VRIC, January 21st and 22nd. There's a link in the description below where you can get your tickets. And today's guest is the author of The Great Silver Bull and the editor of Silver Stock Investor with over 20 years of experience investing in commodities and precious metals. It's Mr. Peter Krauth. Welcome back to the show.
Jesse, thank you to have me back, and it's always a pleasure to chat with you.
Great. Well, I want to start with a broader question, and this is something that I've asked you before, but a lot of time has passed since we last spoke. So maybe if you could give us an update on the main tailwinds you currently see working in the favor of silver at this moment in time.
Sure. So there are probably, I'm going to say, three main ones. The first one would be, because we know from history, the last sort of 20 years or so, that there's a really high negative correlation, about 80% between the US dollar and silver, the silver price. So when the dollar falls, typically silver goes up. The weaker dollar that we've seen in the last, especially the last few weeks, in fact, a bit of a milestone breaking below the 100 level in the US dollar index. And it was at 114 last fall. So that's about what, I don't know, roughly a 13% drop or 12 to 13% drop in maybe 9 months. That's tremendous. And so that's certainly a good tailwind for silver. What we also see is that, and I think the market is really starting to price in a potential or near-term end to Fed rate hikes. That is very helpful. We've seen inflation come off considerably as well. At least headline inflation, the CPI numbers. And then, you know, on the fundamental side, silver's industrial and investment demand has just been soaring. Last year saw an 18% year over year growth in demand for silver, while supply was absolutely flat, which is just incredible to me to see demand rise that much and supply being completely unable to respond in any way. And I do want to kind of maybe end this answer with an interesting, I'm going to sort of paraphrase, but this is from the Australia New Zealand Bank, the ANZ Bank. They had a report recently, and they said that they feel that we're entering a period of tightness in the silver market that has not been seen for decades, and that even higher silver prices would not necessarily alleviate this tightness. So that really speaks to very particular kind of market for silver.
Well, you've also been researching the use of silver in solar panels quite a bit. I know we spoke about that before as well, but do you have an update there about the latest data when it comes to silver's use in solar panel technology as well as other green technologies?
Absolutely. So there's some interesting work by a group called Rystad Energy, and they estimated that this year there would be let's be specific, all new production capacity of solar panels would be 80% made up of the two newer technologies. And these technologies are HJT and TOPCon, and these two technologies require anywhere from 50 to 150% more silver per panel. So it's really coming on stream. They've also said that by and going back about 3 or 4 years, these technologies made up maybe about 10% of production capacity. By the end of this year, that should reach already 35% of world production capacity. So these technologies really are taking on a new life in terms of how solar panels are being manufactured. And that just requires that much more silver. I think, we've seen silver loadings drop a lot over the last 10 years, the amount of silver that goes into a solar panel. And I think with these new technologies coming on, we're at an inflection point. It's going to really take off. We're going to see a lot more silver being required. And, the estimates are for maybe 160 million ounces of silver for the solar industry this year. I think that's way under. We're going to see probably closer to 180, maybe even close to 200 million ounces in a supply of 1 billion ounces. So that could reach somewhere close to 20% just going to solar. It's just amazing how that's just been taking on a life of its own.
A lot of people talk about how undervalued silver is, and I want to point to premiums here because premiums on silver bullion have seemed to be quite high. In addition to regular premiums, where I'm at in Europe, across much of Europe, there's an extra tax on silver that actually brings the price up even higher. So I'm wondering if these premiums that you're seeing at the moment maybe reflect closer to what the true value of silver actually is.
So I would say that it's probably somewhere in between. I just looked again recently to see what the premiums were at. American Silver Eagles right now are at about 55 to 60%, which is just historically very high. I mean, they've been higher, but that's still historically very high. American Silver Buffalo rounds, so these are not mint produced mint series coins, but still we're still at 20% above spot. And normally a mint series coin should be somewhere around maybe 12 to 15%. So we're looking at premiums right now that are up to 4 times normal. It's just crazy how how these premiums are high and staying high. And one of the big reasons I think is that the U.S. Mint just can't produce enough. It can't get enough blanks, so they actually buy the blanks from producers from non-sovereign mints. And then they actually use these blanks to produce the coins. But because they're competing with so much demand from overseas, they just can't get enough supply, and that's helping to keep the prices higher. Is it justified? I mean, it's justified in the sense that the market's determining what the price is. Is it reasonable sort of longer term? I think longer term, it's probably somewhere in between, say, normal premiums at up to say 15% and current premiums around 60. So let's say probably closer to maybe 30, 35 is a fairer reflection of where these coins should be priced, and a fairer price of what the silver price should actually be. So, but people shouldn't forget that there are always going to be some reasonably hefty premiums on silver coins, especially mint ones, over the spot price. And that has to do with manufacturing, distribution, all that sort of thing.
Let's talk about silver miners here because sentiment in precious metals miners, particularly the juniors, seems to be at an all-time low, but the fundamentals do look very sound for silver in particular, as you've just mentioned. Is this a time to be looking at the junior mining space and perhaps the overall silver mining space? I know there's not a lot of big producers necessarily, but is this a time to be looking at it as an opportunity, or do you think it makes sense to sit on the sidelines and that we could see further downside to come?
So this really is an interesting question. And I guess I should start by saying, absolutely, I do see it as an opportunity, but I want to qualify that a little bit first. If you just look at the silver price, and if you were to ask people who follow the precious metals space and even quite closely work in the precious metals space, if you go and ask them, how much is silver up in the last, say, 4 years or 5 years? My guess is you're going to get an answer of somewhere around maybe 10 to 20%. And in fact, silver is up 67% from July of 2019. So in the last 4 years, silver is up 67%. That's an amazing amount. That's on the scale of about 15 to 16% a year in the last 4 years. It was $15 at the beginning of July of 2019. So I think that a lot of the problem is that, it's not like maybe tech stocks, for example, that you see start to rise and to continue to rise consistently month after month, year after year, of course, when it's in bull phases. But and silver, gold to a fair extent is like that too. So you get these considerable rises, and then you get these consolidation periods where it goes sideways for months or years. People get bored of it. And maybe some people got into the market when it was up, so they got, I'm going to say in quotes, burned if they decide to sell. But the problem is really much, I think, a question of sentiment. It just feels like silver's gone nowhere for the last while. And if you look back to, say, mid 2020, in fact, you'd be right, it hasn't, because it's been in a range of about $18 to $28 since then. But if you look back on a 5-year chart, I mean, we're up 67%. That is just tremendous. And I think that, that's where the opportunity is. And I think that's where people are at a disadvantage if they just don't have patience, because they're not prepared to buy something, especially when it's hated. Get in. I'm not saying load up, because it's always difficult to know if you're at a bottom or near a bottom, but they should accumulate this, both, I think, the physical and the juniors right across the board in terms of risk tolerance within the silver space, silver equities. But I think we did hit a major low last fall, and it's looking like we may have hit another medium-term low again, perhaps last week. Yeah, I mean, if anything, look at these, look at the ones that are most attractive, do some research, look for guidance on which juniors may be the most attractive, and accumulate. It doesn't have to be an all or nothing kind of thing. I absolutely, in my book, I talk about how to buy and how to sell. And I think the wise way is to layer in, and again, when you sell, to layer out potentially as well. So, you can buy a position into a position over a matter of weeks and months, and that often is sort of the lowest risk way to do it.
Well, let's touch on exiting positions. Because you spoke about scaling out. A lot of people don't have an exit strategy, which can be quite a big problem. How do you personally approach knowing how to exit positions? Is there a certain percentage gain that you're looking for, a target that you set when you buy an equity to begin with? Do you scale out slowly? What's your strategy there?
So I would say that, if you can, especially in a junior, if you can get a double, I would absolutely sell half immediately. And then you're at no risk anymore. You're basically what we call playing with the house's money, like at a casino. So, and it doesn't have to be a hard and fast 100%. You could, let's say you get a considerable run up after some really good news of 75 or 80%. You can do the same thing. You can sell your initial position cost and keep the gains, and then play with those gains. Keep those exposed to that stock, that amount exposed to that stock, and watch it and see how it progresses. But if you're looking sort of at the bigger picture, bigger cycle, I think that there are some some indicators, and I personally think that we've come out in the last few years from the low, the mid secular cycle low of this precious metals bull market, which for me started back in, say, 2001. And I think that we hit the peak of the first cycle of it, the first part of it, I should say, the first half, around 2012, 2013. The low came arguably, in the last few years, and that since bottoming, we're on another steady rise, and that we probably have at least 5 to 7 or 8 years left before this peaks once again. But the signs of a final peak are going to be things like, the whole sort of cocktail party signal, where everyone's talking about how silver is doing and how they made X amount in silver in the last few months. When you see some crazy returns, especially in some of the juniors, that could be on the order of maybe 8 times, 10 times. In some cases, you may even get up to 50 or 100 times. You're going to have stocks that have silver in their names that, are moose pasture and really have nothing close to anything attractive in silver, and yet their stocks have taken off. These are going to be all the kinds of signals. There's also things like, and I have a chapter dedicated to this in the book that talks about how and when you'd want to sell and what to look for. And so, there's fear of missing out. This is all this sentiment thing. You'll have indicators like the gold silver ratio. If it gets somewhere below 30, for example, I think it's really time to start paying attention. The Dow silver ratio, you have things like real estate to silver. If you look at the average home price in the US to the silver price, again, I detail a lot of this stuff in the book, and I have actual numbers to look at, but these are all some great indicators that will give you clues that we are getting really frothy, and it's time to, and again, it's not an all or nothing thing. You can layer out, you can tell yourself, if you feel that we're close to that point, you can sell, let's say, a quarter of your positions, and you can sell a third, and then watch and wait for a few months and see if things continue to move upwards. Either sit tight or perhaps if you feel you're getting antsy and things are again too frothy, you can sell another portion of your holdings and stay sort of 1 foot in, 1 foot out, and partially committed, and so you've locked in a bunch of gains. You're still maintaining some exposure. I think really that is the way to go about it. It's the lowest risk approach.
What's up, guys? Quick break. My name is Jay Martin. I'm the CEO of Cambridge House and the host of the Vancouver Resource Investment Conference. I wanted to quickly point your attention to a link right beneath this video where you can subscribe to our new weekly newsletter. If you want to better understand the minds of the best investors in the resource space, subscribe to this newsletter. I author it personally every Sunday and I love writing it. Hit that link below to subscribe. All right, back to the interview.
How has inflation been affecting the mining industry? Because we're seeing not only inflation, but supply chain issues driving up prices. We're now seeing a trend of deglobalization, which means certain inputs, certain equipment, a lot of the things that these companies will need to mine might not be available for the same prices that they used to be. So how do companies deal with that? Is that trouble for miners who aren't well capitalized?
Absolutely. I mean, I think that inflation has definitely been eating into costs. We've seen that over the last, say, year or so. When these companies report, they've said that materials are more costly, energy is more costly, labor is more costly. So it's fed into their entire, production process. And they don't control the silver price, so they're price takers. So that means that the part that they can control is their costs to some extent, right? And so they have to be well capitalized, and that's going to be what allows them to sort of weather leaner times. And the ones that are, I would say many of them are in fact in much better shape than when the last cycle hit, because things got frothy. They were not cautious. The ones that have fared especially well. And the ones that haven't, maybe either aren't around anymore or got bought out by someone else. And so what's encouraging is that I think overall the sector is much leaner, much better capitalized now. You're right. There are always some badly managed ones, but overall, I think that, if you go back about a year or so, this was the miners and the precious metals, as in particular, was the highest yielding sector in the S&P. And people just don't realize that they're making boatloads of cash and they're accumulating that. And I think that they are really going to start to put that to work using both the cash that they're accumulating and the gradual increase in their share prices as currency to help them go out and acquire and to either acquire projects, to acquire other companies, to do consolidation. And I think that's the next phase that where at least I see a lot of opportunity in the precious metals sector.
And are there any names that you've been watching or investing in particular that you could share with us that you've done your due diligence on and you think maybe investors should take a closer look at?
Definitely. So one of the sort of mid-tier names that I like a lot right now is a company called Aya Gold and Silver. They operate a mine in Morocco. I think that they're doing a tremendous job. A very finely tuned company. The management is highly experienced, great team, and from what I can tell, they're also treating people very well on the ground, paying them well, giving them the kinds of tools and equipment that they need. And over the next 12 months or so, this company is set to quadruple its production at its flagship mine called Zgounder. And now they're being, I'm going to say, relatively aggressive, but conservative in terms of spend, nonetheless, in terms of growing. So growing through exploration. They have another mine called, or deposit, I should say, called the Boumadine. Everything's in Morocco, by the way. All of the holdings, or nearly all of their holdings. So Boumadine is really looking like it could actually outpace at some point the existing producing mines, Gunder. And so they've also gone out and acquired another project just recently that they got for perhaps a tenth of what the seller was asking for originally. Tons of potential. I think that because it's Morocco, it's dramatically underexplored. A lot of these areas have never seen modern exploration. And so they have a big first mover advantage. So that's one that I would really keep a close eye on. I like New Pacific, that's operating in Bolivia. I feel that, I mean, you know, I never thought that I would be bullish on Bolivia, but I do think that Bolivia is probably 10 to 15 years ahead of what we're seeing in places like Chile and Peru. I think that Bolivia probably tried those things, those moves a while back, and mining is just so important to the country that you know, New Pacific also is a big chunk of their shares are owned by Pan American Silver. They're helping them to advance their project. They've been operating in that country for about 20 years or so. So I really like what New Pacific has. They have, again, one of the higher grade undeveloped silver deposits globally, and a lot of it is near surface. So that's another one. That's sort of a growing developer. And finally, in the junior space, I really like Suma Silver, which has two projects. I consider them both almost equally as attractive. One is the eastern half of the Tonopah district in Nevada. The other is the project and that's called Hughes. The other project is in neighboring New Mexico, which is called Mogollon. And this is a past producing area. They think that this could actually be one of the highest grade, highest potential undeveloped silver districts in all of the US. They're coming across some really high grades. There's lots of underground workings, and the guy Galen McNamara, who's running that, ran the department, I guess you'd say, or sector for NextGen, which is a uranium, a fantastic uranium story out of the Athabasca. So overall, great management in each of these, and they, you know, kind of cover the gamut from mid-tiers down to juniors. These are great names, and I think that again, your approach probably should be, if you're interested in those, to kind of gradually layer in. But yeah, great potential at each of these.
Yeah, I actually interviewed Galen McNamara a few times. He's a real, very, very passionate, real silver bug, and great projects they have there at Suma. I want to touch on a tweet you recently made because, and this is on the BRICS currency. Now, this is a topic that is taking the precious metals community by storm. Everybody seems to have an opinion on it, from this is completely nothing, it's useless, it's not going to do anything to de-dollarization is now coming. The US is going to lose its value as reserve currency, and gold is going to go to the moon. So you tweeted, looks like the BRICS see gold as money, but will the new currency be convertible? Do they have the gold to pull it off? I think this is a very fair question, because if you're going to get a gold-backed currency that can't be converted or redeemed for the metal itself, then you kind of have another form of fiat where the ledger can then be manipulated. And as much as, you know, a lot of gold bugs rally against the Western democracy and the US hegemony, and you know, I get it that there's corruption in the political system, but I don't know if I trust President Xi to be keeping an accurate ledger of the amount of gold they have there. So how do you think this is going to play out? Do you think it will actually be convertible, or do you think it's going to be more of a trust us, we've got the gold sort of situation?
I think it's the latter. I do think that, like you, it's going to be really hard to trust, you know, this group in terms of the gold being there and not messing with the ledger. I'd love to think it could happen, but there's, you know, I think there's also too much to lose by bringing in a true gold standard. You already have India that's saying that it doesn't want to participate in a BRICS currency. It rather promote its own rupee because they have relatively good relations with the West. And so, the BRICS members, some of the larger ones, have some good quantity of gold that I have little doubt. And in fact, I'm willing to bet they have a lot more than we're being told officially. The interesting thing, I think, with India is that because they have been such on a personal, individual level, it's just so ingrained in their culture that they probably, as a nation, have more gold than anybody else. I've read studies going back a decade or so that India could have well north of 20 to 30,000 tons of gold if you spread it across, official holdings and then what people own individually, and then they've donated to their to their religious faith, etc. There's donations that they make on that basis as well. And so it's very likely that India has tons of gold, but that it's held individually. So that wouldn't help them on a national basis to help use to contribute towards necessarily some kind of currency. But if we did get there, and unfortunately, I think that if we got there, it would be because we'd be going through so much turmoil, financial turmoil globally, that there countries around the world would have no choice but to back a currency with gold. If it were backed like it was done in the past at say 40%, that could actually help value those currencies much higher, because if 40% is enough for, let's say, the market to say that technically it's fully backed, then that currency, takes on a considerable amount of more value. There may be even, I could see where you'd have a rush to, when push came to shove, you'd have a rush to who may be first, because they may want, to have that advantage. In many ways, it would help their imports to be a lot cheaper because their currency was that much more valuable. So, I guess long answer to a short question, but I think it's a ways off. There's a lot of agreement that has to happen before you get there. We're already seeing some dissension. I'm not sure that we could make it there. And a lot of the smaller members, I think, are far from having enough gold. And to be fair, there's always this point about people questioning the idea of a gold standard, saying that there's not enough gold in the world, and let's put that to rest. There's always enough gold. It's a question of price. So if price is high enough, then we have enough gold. But in terms of, I just think there's probably not enough balance between the size of those economies and the amount of gold that each of them has individually. So it could be a way off. It's just very interesting, and it's almost shocking to me that we're here talking about this, because 15 or 20 years ago it would have been absolutely unheard of, and yet we even have, I don't know if you saw this, but I think it's Robert Kennedy Jr. who's running for the Democrats in the U.S. is talking about potentially backing the U.S. dollar with gold and or Bitcoin, and making these transactions convertible, non-taxable. I mean, again, shocking stuff to be hearing, from high level political actors. It's just it really speaks to the kind of huge changes that the world's going through right now. And I think that the sure bet is to have exposure to this. The bet is not, will it happen and how do I take advantage of owning that currency or this currency? The bottom line is the currency is gold and silver. Own those, and that's your least risk, highest odds of success way of benefiting from that. And even if it doesn't happen, we're still in a long-term commodities bull market. These are sure plays. That's the way you want to have exposure.
Yeah, completely agree with you there. And it will be fascinating to watch how the BRICS currency develops. And that's definitely interesting about RFK talking about backing a currency with precious metals or Bitcoin. So things are changing, and it's fascinating to watch. Well, thank you so much for joining us today, Peter. For those who want to learn more, could you tell us about the Great Silver Bull and Silver Stock Investor?
So The Great Silver Bull is a book that I published a year ago. It's available on Amazon, and my idea behind that was I wanted to bring what I thought I'd like to read about silver, which was the whole picture. And I make a point of covering the history of silver, covering the sort of the macroeconomic picture of what place silver has in our lives, what role it's played historically, and what role it's likely to play going forward. And then I talk about the supply-demand fundamentals in the market so that readers can understand the silver market. And then I talk about what makes silver move and how you'd invest in silver, and ultimately how you would build a portfolio, and ultimately how you would sell off your silver holdings. So, I'm really happy to see that the feedback I've gotten has been along the lines of what I was attempting to achieve with the book. And so really being an overall opportunity and an easy read on the opportunity in silver. And so if people want to follow me other than that, I write which is, as far as I know, the only silver-focused investment newsletter that's available out there, called Silver Stock Investor. So you can find that at silverstockinvestor.com. And you can follow me on Twitter at Peter_Krauth. And I'm also on LinkedIn at Peter Krauth.
Great. Well, I'll put links to all that in the description below for anybody who wants to check them out. Thank you once again, Peter, for coming on and sharing your knowledge with our audience.
As always, it's been a pleasure, Jesse. Thank you.